Ladies and gentlemen of the crypto space, we're live on a Thursday at 11:27 a.m., May 20th. Markets look good. Talk about a recovery. Everyone likes to see that. It's painful yesterday. Somewhat painful the night before, painful the last 3 days, more or less. We could talk about, obviously, reasons and manipulation that led to such a decline. But whatever it was is irrelevant. What's most pertinent was it was a manipulation of how the markets generate their excessive volatility, which is with derivatives and leverage and options and futures contracts, and what the manipulators were able to exploit was short positions. Long positions, excess long positions, and they triggered a depreciative cascade of long liquidations. And that's it. That's the whole story, and that's why the crypto space is so volatile. Um, and in so many regards, it's irrelevant. And what's most pertinent is how to navigate these markets and to understand that that is what occurs, and that is totally mutually exclusive from the technology that everyone has come to appreciate in the DeFi space. Particularly the ideology that I talk about is what I like to focus on. Obviously, there's plenty of projects that are extraordinary, and the developers are incredible. You have Keeper DAO, you have um, Alchemist, but then we get into fundamentals. And the fundamentals that I look at are quite different than fundamentals that just say it's an awesome project. We talk about monetary properties, the properties of money, inflation, deflation, and velocity with regard to financial networks. And those are the fundamentals that tell me where to look. And as I have always said, fundamentals tell you where to look and technicals tell you when. And the title of this stream is quite interesting today. And it was reinforced really by yesterday's experience. More than ever, I believe that the business model is what counts, and the asset's valuation will appreciate over time, particularly because monetary velocity will just continue to consume liquidity or drive liquidity into the space, because monetary velocity screams opportunity. And even considering yesterday, I was literally deploying this business model. I had to scale back. I had to adjust my principal allocations a bit. I had to take some debt off the table. But my capital and my equity was still performing. The business was still functioning. My doors were open yesterday. I did not close the business. I didn't have to shut down. I needed to adjust the parameters to account for the volatility. And now, if I just find the conviction I need to stop looking at the asset prices and focus on what's relevant, running your business, then I'll achieve what I'm looking to achieve. It's a great title today. Focus on the business model rather than the assets. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial DeFi or nothing at all. I'm not. Before we bam and pop it over to the main screen, I think folks glance over that last sentence a little too often. Non-custodial DeFi or nothing at all. Folks have assets on Binance and Coinbase and wherever, and those systems were down yesterday. Why does everyone not have a ledger? It's a $30, $40 device, and the odds are you're working with more than $30 to $40 in the crypto space. Step it up. Take care of your assets. Have respect for your fiduciary responsibility. A fiduciary is someone who's considerate of financials and respect for the money that's at play. And that's exactly what I have for myself, and that's the ideology that I convey to everyone. Respect the portfolio, respect your capital, and it will respect you. Bam, let's pop it over to the main screen and see who's in the stream. Reserve name bears in the house. Can confirm I'm in pain. Noah, yeah, I'm still down, probably about 8% at this point. But I was down 30% at one point, portfolio balance, and it has recouped almost all of it. I'm literally almost back in the green. I'm back in the green relative to Tuesday. I'm green for the week overwhelmingly. MATIC has carried the entire portfolio in that regard. But it is a happy Thursday, reserve name bear. Wave mappers in the house. Times like these are good for character building. Well, it's good for storytelling. And it's not just me telling you the story, it's you guys understanding and defining your own narrative as well. Everyone should develop their own narrative for how they view and experience the markets. And that will affect your actions and your choices and how you deal with the emotions when you're engaging with the markets, which is why I tell the story of focus on the business rather than the asset valuations. So instead of worrying about the valuations, all I was doing was balancing the portfolio, adjusting between my five chosen collateral assets, which I could leverage debt off of to operate a business and put capital to work, access equity and put that equity to work. It's Aave, Bitcoin, Ethereum, MATIC, and dollars, one of the available stablecoins. All of them are collateralizable assets where I could extract equity and put that capital to work to generate a recurring revenue stream, which is a business. And that is the business of banks. Be the bank. Killis is in the house. Jay Nice Mint, always a pleasure. Frank, cheers. Deeply confused afternoon all in the UK. That's right. Must be what was that, 5 o'clock for you? 5:30? Heck of a 24 hours indeed. What can you do when you live in a shoe? At least it rhymes. Not much in the shoe, unless you get internet there. I'm very grateful I have a balanced portfolio and lots of stablecoins. Thanks, Noah. It's my pleasure. Cash works. Cash belongs in the portfolio. Operating a balance sheet as a business, the cash in the portfolio is a combination of principal and debt. Debt counts in the total amount of capital that you have in your portfolio, working capital. I always advocate that debt should always have that you should always have that cash on hand. So if you're borrowing money, you put that money to work in the form of dollars such that you could always repay the debt and rebalance collateralization as need be. I'm not a fan of leverage. I am not a fan of risk. I take very little risk. I keep a healthy health factor or over collateralization ratio on MakerDAO, which I don't operate on anymore because that's on Ethereum. I'm not paying those gas fees. So my health factor on Aave and Polygon is always over 2. I like to keep it around 2.25 to 2.5. If times are hot, maybe I'll get it to 2, and I'll put more capital to work. That's the name of the game. I'm still worried about USDT going tits up. I don't think so. It's the same as MakerDAO. It's an over collateralized stablecoin peg. If the in the What'll happen is if it loses peg, they'll engage a margin call. They'll either ask for more collateral assets from the depositors, or they will liquidate the assets, and that's the way their collateralization or their peg is maintained. So it's a manual peg. It's a centralized organization instead of the automated organization like MakerDAO that'll automatically liquidate the assets. So I'm much more of a fan of MakerDAO as compared to Tether. So DAI, I think, is much more reasonable. Not much fear with regard to Tether. It creates a bit of risk because it's a pain in the ass to manage those types of collateral assets, whereas with MakerDAO, it's a completely automated and digital process. So it's frictionless. Whereas they have a shitload of work they have to do in order to liquidate a lot of those real world tangible assets. So is what it is. That's their chosen business, and it definitely works because it's logical the way their business operates. Have you looked at Elixir Finance? Sure. It does. It's a V3 vault concept. Risk on less than 1%, 0.5% of the portfolio. You could take a gamble. Goes 100x on the money. Turn 0.5% of the portfolio to 5% or 10%. Yippee! That's how you grow your capital base. I would not apply. I am so perfectly positioned with regard to risk. I got 0.5% in a couple of risk assets, and that's it. Everything else is collateral assets, and I'm operating a business. I'm done with risk. I have absolutely no interest in risk. I have interest in operating a business at this point. No market for perps during the rip. Binance. Stop using Binance and start using DeFi, my friend. Sonny's in the house. Always a pleasure. Jonah, thank you for everything and always, Noah. As always, Noah, considering moving all assets to Polygon, is there enough liquidity for most pairs and just quick swap the best? So I opt for 1inch because 1inch is obviously an aggregator of DEXs. So it usually offers the best slippage. I'm trading less and less and less, and I'm finding more and more conviction. What I end up doing is I'll adjust principal assets, which includes cash, depending on market conditions, to maintain my health factor. And the capital that I have that I borrow is put to work as cash. I am operating this portfolio as a balance sheet. I am done worrying about the principal valuations. I expect the principal valuations to significantly and asymmetrically appreciate, which means I'll be able to put more capital to work. As the price of the assets goes up, I can make more money. As the price of the assets goes down, I can make less money. And just like with a business, once you reach critical mass and you're able to service your debt and you're able to grow your principal, you can start drawing a salary, just like with a business. It's the same exact thing. Operate the portfolio as a business and you'll never look back. Be the bank. That's the approach. The crypto boss, how do you think we go down again? Have you seen the Wyckoff distribution model? Yeah, I've also seen previous bull markets. I've also seen plenty of ways to look at the crypto space, and I've chosen to operate everything as a business. I have collateral assets, which is exactly the way real estate works. They use homes. They borrow to get another home. They generate revenue streams with tenants. They generate enough income to service their debt and draw a salary. I'm basically operating a real estate business in crypto form that has no friction, is completely permissionless, and I could borrow capital without any paperwork whatsoever. In 3 seconds or less, I could borrow $500,000. So I'm operating a real estate business without homes for all analogous purposes. Zach's in the house. Always a pleasure. Deeply says 4:30 over in the UK. 5-hour difference. That's the name of the game. It's a small world. Live W. Hey, Noah. Hope you're doing well. I'm okay today. Yesterday was an emotional day, but I learned a lot from it. And I learned where I need to place my convictions and how I need to focus my efforts. And I definitely need to spend less time staring at price action and at the computer. I could do better personally, and it'll allow me to be a more effective business operator. Nick Bond, can you collateralize Ethereum for stables on Polygon, or should I CDP on L1? Aave, stables, Ethereum, Bitcoin, MATIC, and Ethereum, and Aave. Aave is also collateralizable, and obviously dollars. You could collateralize right now in Polygon, Aave, USDC, and DAI. So there's your 5 collateral assets that allow you to operate a business. Any comments on traditional market rally today? Yeah. Comments is basically this. Oh, look at that. Look at that, boys and girls. Oh my God. So this is the chart that matters with regard to the traditional markets. That is forming if this keeps going, it's either going to be a dragonfly doji or a bullish hammer on the monthly. And that this month that ends in 8 days will tell, I would argue, the next couple of years for the traditional markets. Barring a liquidity crisis or a systemic event in the legacy financial system, if this ends a dragonfly doji, this will be the first month in the last 14 years that this price action resistance has been breached. This is a massive, massive, massive candle, monthly candle. 8 days, and we have a significant piece of information for how the next couple of years will head, in my opinion. This is the S&P denominated in the M2 money supply. Let me zoom out for you guys to have some perspective. This is 2008. That was 2008 resistance. We had the systemic collapse. Then we pulled up. Then we had the 2020, the pandemic collapse. Neither one breached that resistance line, but we are there. We are above that resistance line, just like we were in 2020. We breached it. We fell through, but now we're printing, either looking to print a dragonfly, potentially, or a spinning top, or a bullish hammer. Let's see how the market goes. There's 8 days left, but whatever it is, we are above trend resistance, and we wicked down significantly, but it is above trend. So this is extremely bullish for the dollar-denominated price of major equities indexes. Now, bear in mind, who cares about the dollar-denominated price? This thing is not outperforming. Now you have to look at the other assets compared to the SPX. Now, for instance, BTC, keyboard, BC divided by SPX. So Bitcoin had its dip, but as you can see here, since October, it has been ripping against the S&P. Bitcoin has been outperforming the S&P to an extraordinary degree. And this is obviously the correction. This is a massive wick. And once it breaches like 60 grand, it's off to the races again. This is a massive, massive chart indicating that Bitcoin significantly has been outperforming the S&P. Deeply confused, WMATIC Ethpool on Sushi Swap paying 148%. Woo! Bear in mind, that's two volatile assets. And food for thought, everything that I talk about with regard to LP positions is still completely valid. Double volatile assets is a risk on LP position. If you pair MATIC with USDC, which Sushi also has, that is a risk minimized position that will be dollar stabilized. Capped upside, or not capped, but restricted upside, restricted downside in exchange for capitalizing on transaction fees and the incentives, which is capitalizing on volatility. Small advantage, for example, on 1 inch now shows USDC value at 107. Yeah, that's just the imbalance in the pools. That's the liquidity isn't entirely there yet on Polygon. There's only a couple of billion, whereas there's hundreds of billions of dollars in Ethereum, at least 100+ billion of dollars in DeFi on Ethereum, according to different sources like DeFi Llama. So that's just their pools being imbalanced. So curve, if you want to get proper swappage, you want to get proper swappage for your stables, you do it on curve. Small advantage, same with other stables. Yes, no doubt. I had to notice that small advantage. Yep, yeah. So that's the case. Just be careful when swapping. Non-curve LPs regarding stables will introduce a lot of slippage. I've seen 2, 3, 4% in a lot of trades, and that's a lot of slippage. And I've been over trading, unfortunately, and I've spent a lot of money over trading, and I haven't needed to. If I did not overtrade, I'd probably have an extra 100, 200 or so. And that's unfortunate, but I am learning and I will do better. I'm focusing on my business, and I don't need to move as much principal around as I've been doing. I just need to adjust more strategically based on what's outperforming. MATIC denominated in Ethereum, you take a look at that. MATIC ETH. The 4-hour. So MATIC is outperforming ETH, and it looks like it's forming a symmetrical triangle in some regards. And MATIC denominated in Bitcoin is MATIC outperforming Bitcoin. Same trend. It looks like MATIC is positioning to outperform Bitcoin. MATIC USDT divided by AAVE USDT. MATIC is outperforming AAVE, and that means MATIC is the position to be overweight in with regard to your principal balance. MATIC USDT, that's the other critical pair. Looks like it's the same thing. Looks like a symmetrical triangle formation, and a relatively large one at that. So cash belongs in the portfolio. always have cash on the books. If you're operating a business, you need cash. You need liquidity. You need operating expenses, and you can only do that with cash. Cash being a combination of principal or debt, depending on market conditions and respecting the portfolio balance. If cash is outperforming, you want to be heavy in cash. Right now, cash isn't outperforming, so cash is the smaller percent of the portfolio. If Aave is outperforming MATIC, I'm going to go heavyweight on Aave as compared to MATIC. Doesn't mean I'm going to exit a position entirely. That would be awkward. What you want to do is shift around the balance of the portfolio such that it is healthy. And that is the business operation. Rather than focusing on the price of a specific asset, focus on the balance of the portfolio such that you can best execute on the business model. Jeremy, can you talk more about using over-collateralized loans and why you keep it in stables versus speculating on crypto? You just said the key word, my friend, speculating. I'm not a speculator. I'm a business operator. I don't want to gamble. I don't want to take risk. I don't want to make as much money as possible. I want to generate a revenue stream. I want to be the bank. I want to provide liquidity to people that want to speculate. They could go out and speculate all they want. I want to provide the cash, and I want to be sitting back with a margarita and a cigar in the backyard by the pool. While they're the ones doing the work, trying to buy low, sell high. No, I want the predictable cash flow on a daily basis. That's my goal. So I want to minimize the crap out of risk. I want to generate a recurring revenue stream without having to put in as little work as possible. All I have to do is balance the portfolio's assets accordingly in terms of a business model. This is no longer gambling for me. This is not speculating. This isn't buy low, sell high to accumulate as much cash as possible. I have a sustainable methodology for interacting with the crypto space. And that's what I rest my convictions on. And that is how I approach these markets. It's a very contrarian ideology. And the best part is it's a sustainable ideology. Polycat worth a punt, never heard of it. I have no interest on it, but I'm more than happy to provide liquidity to persons that want to speculate on such assets. And that is basically what I do. About 600 grand in curve right now, cranking in 30, 40, 47%, 47% interest on 600 grand. What's the point of speculating? Now, obviously, for myself, I have a critical mass of liquidity, but the whole point is you need to understand how to operate this business even if you have a smaller portfolio. Because if you're taking those 1% gambles, as I suggest, 1% here, 1% there, 1% turns to 10%, that's how you grow a portfolio. That's how you accumulate this quantity of capital. And that is what makes all the difference. And when you have a liquidity event like yesterday, you need to be able to handle the emotions, and you have to have the vast majority of your capital in collateralizable assets so they recover. All the collateralizable assets that I'm working with have pretty much fully recovered, at least to a state of healthiness. I guarantee you the risk assets haven't recovered. Anything that isn't collateralizable has been destroyed. There's nothing to this asset. It has no purpose. There's no reason to hold it. The only thing you can do with it is sell it. Give a person a reason to hold an asset, and they will hold an asset, whether they know they can or not. And that is why collateralizable assets make all the difference. That's the defining fundamental that whether someone consciously or subconsciously knows it will affect the actions that the average market participant takes. Nothing collateralizable about it, nothing collateralizable about it. Bitcoin took the shit. Um, Anything that can't be collateralized is in the tanks. Polygon up 85% for the week. L2 scaling solution for Ethereum. It commits its data storage to Ethereum. It's the Ethereum scaling narrative. Be the bank. Can't you can collateralize it on L1, Aave or and Aave V2. So that's okay. And you can collateralize some of these assets. That's why they're in the top 20 market cap. Polkadot has a strong narrative, so it's still speculative because it doesn't have critical mass monetary velocity nor critical mass liquidity at this point, but it's very well positioned to get there. I have no idea why Cardano's up this much. Well, Binance, BNB, BSC, critical mass monetary velocity. I'm sure this is going to recover quite well, depending on the risks of their centralized system. So that's where the fear comes in. Fear is what drives markets down, and comfort is what allows markets to grow. So there's a lot of fear associated with BNB and BSC because it's a centralized system. It's experiencing systemic difficulties. Things are not working. They're failing. Errors and rug pulls and just horrible experience, and something I would never, ever, ever allocate capital to. I have no interest in the price of BNB, but that's the reason this market has triggered such price appreciation, because it does have critical mass monetary velocity. There's still participants that don't have fear and are engaging with the markets. That tune may change, and I think there's no logical reason that Polygon wouldn't flip BNB at some point. Let's wrap up the stream in a couple minutes. It's been a very busy day. James, what's your ideal percentage of going heavyweight into a position with your collateral assets? Well, what is heavyweight? What does that mean? Let's say the vast majority of portfolio is in collateralizable assets. Balance the assets. Depending on market conditions, you might want to have more Bitcoin than Ethereum. You might want to have more Bitcoin than Aave. You might want to have more Aave than Ethereum. You might want to have more Aave than MATIC. You might want to have more MATIC than Aave. You might want to have more cash than Bitcoin. You might want to have more cash than Ethereum. 5 collateral assets allow you to engage with a business rather than looking at the price of the assets. If the asset prices start dipping, you reallocate to cash, and now you have more principal, more cash principal in your on your balance sheet. So as I said, working capital. Think of this in terms of a business. Working capital is a combination of principal, cash and principal, and debt and principal. And it depends on market conditions how much of each collateral or assets that you have on the books is weighted. The reason I love this narrative is because it's the antithesis of what everyone thinks about when they're trying to look at the crypto space. Everyone's like, what's the next coin to go to the moon? Elon was on Saturday Night Live saying Dogecoin to the moon. What are you going to do when it goes to the moon? What are you going to do when it shits? You need to have a sustainable methodology. You need to define a narrative for yourselves how you want to engage in these markets. And if you do the same thing that everyone else does, 99% of people don't do well. In order to achieve what the 99% don't achieve, you need to do something different. And the ideology that I present to you is probably it's what a lot of people do, because clearly there's a lot of liquidity providers, but they're not defining it rigorously on a daily basis in conversation and in depth as I do on the stream. Michael says, how long will these rewards last? It's irrelevant. What's pertinent, those rewards are today. And when those rewards stop, there's another opportunity. You move capital from underperforming assets to outperforming assets. You move capital from investments that have a opportunity cost to investments that don't. So if there's less yield in one place, you move your assets to where there's more yield. That's how you do it. Killis, is there a way to directly deposit USDT or other stablecoins in the Curve Polygon without bridging? Excuse me. Curve is Polygon is a network. You do need to bridge over to Polygon to have assets on that network. Ethereum and Polygon are connected by a bridge. David, hey, Noah, I'm joining back on the stream. Exciting times. Always appreciate your insights. You're very welcome. I hope it helps. It's obviously a very contrarian ideology, and I take a great deal of honor in my fiduciary responsibility to encourage risk off, risk minimization. Cash works in the crypto space. Respect the portfolio. Cash. because you could outperform debasement. You need to cover 15% per year on cash, and you could cover way more than 15% per year in the crypto space. You can't keep cash in a bank account. It would be literally a fiduciary irresponsibility to have cash in a bank account. You're guaranteed to lose value. It's a fiduciary responsibility of mine to tell people to take a risk as compared to a guaranteed loss of value. The only thing, there is nothing worse than a guaranteed loss. Even any risk is better than a guaranteed loss, which means we talk about on the stream minimized risk. Because if you have a range of risk, and that entire range of risk, everything up until Dogecoin is better than a guaranteed loss, I'm going to cancel out 99% of that list and take that very tiny risk minimized because I want to take the least risk possible to outperform debasement, grow the capital, and now operate a business. Convert your portfolio into a balance sheet and everything changes. Always you protect your principal, Sonny. That's right. By rebalancing your principal from underperforming assets to outperforming. Cash may be the outperforming asset. Ryan, have you any marital advice on how to convince your spouse to let you move cash from traditional banking into crypto stables? Yeah, show them $1 million in gains. I know that's not so easy to achieve, but that definitely works. My wife has also always been open to me engaging with these markets. So I don't have the best advice other than being honest. Try and teach her the things that you've learned. Teach her how to manage capital and show her that you have been successful at taking minimized risk, growing your capital over time, being rational, not gambling. Because sure, you show her cum rockets or Dogecoin or Shiba Inu, she'd be like, "What are you smoking, husband?" So don't do that. Take the least risk possible. Take responsibility and respect the portfolio. And if you show her Bitcoin, Ethereum, and you show her capital that's working, and you define a story and a narrative as I'm defining, which my wife appreciates and understands, that's how you are able to get to the next level and get on the same page. Hope that helps. Crypto boss, but you have capital. If you have $500, you have capital. 1% of the portfolio goes into risk on. The rest of it you deploy in a business model. If you need more capital, you go to work. When I get off this phone call, I'm going to work and I'm saving my capital. Check back in 5-10 years. I'm 39 years old. And if you're in your 20s, check back in 10 years. Save your money. This is not free money. Crypto is not free money. It's not about gambling to change your life. Crypto makes dollars work again. Crypto, our grandparents would be proud. Make your grandparents proud. Your grandparents saved their money in a bank account, and back in the 70s and 80s, we're getting 20% interest, and they saved their money. And that's how they grew their money. They accumulated money in a bank account and saved it. The thing is, you can't do that anymore. But crypto is a rebirth of the ideology of our grandparents. And the more sophisticated you are, you can actually outperform the same strategy that your grandparents used. Save and accumulate capital, compound interest, which Einstein calls the eighth wonder of the world, and just play it different. I know you want to turn $500 into $5 million, but if you try and do that, you're going to lose your money. But if you try and turn $500 into $5,000 and you're saving $5,000 a year, in 10 years' time, you're going to have $200,000. In 15 years' time, you're going to have $500,000, maybe even more, because maybe you've been able to accumulate a Bitcoin, and Bitcoin is $500,000 at the end of the year, and it crashes to $200,000 in 4 years' time, it's worth $1 million. So that's the thing. You're seeing the capital, and you're wondering how you get to point A to point B. And getting from point A to point B does not involve risk. You can get lucky, and you put $50 into an asset that goes 1,000 times on the money. If you bought Alpha in November of 2020, you bought $50, you went 5,000 times on the money. 1,000 times in the money. And you turn $50 into 10x, $500 to $2,500. Was that 25? No, 10x. 50, 500, 2,500. You turn $50 into $2,500. Or if you put $500 into alpha, you turn $500 into $25,000. And if that was 1% of the portfolio, that's how you grow the portfolio. You don't need to take excess risk to play these markets differently. And that's what everyone's doing. And those are the folks that get burned. Look, I'm looking at MATIC in dollar denominated form. I'm watching it fall through the 200 EMA. Maybe I'll reallocate a little bit. It looks like Aave is about to outperform MATIC a little bit. So I'm going to take some capital from MATIC and move it into Aave when I get off the call. Everything else looks solid. The market's pulling back a little bit. This should hold the 200 EMA. And if it doesn't, I don't care. I'm not playing the markets like I did yesterday. What if you're 55? Ouch, powder monkey. No. Then we talk and we think about what's the best play. And there will be scenarios where it's a very difficult situation, my friend. Time is everything with regard to value allocation. And the more time you have, the more options you have. FM, will XTK come back? I like their dev team. I have no idea about the price of the asset. Price of the asset and the awesomeness of their developer team are mutually exclusive. I would never allocate the vast majority of my portfolio to anything like that, if anything. 0.5%, 1%. That's the way the game is played. Follow the rules. Define your own rules. Does anyone know if there's a way to cancel the 7-day challenge period when moving funds back from Ethereum? I doubt it. Kill us. Jeremy Quinn, so you get an over-collateralized loan in stables, yield farm with those stables, which earn in various crypto, which in turn has a chance to appreciate still. Sure. I have cash on Curve, which is earning MATIC and cash. I put that MATIC into Aave, and over time, I'm making money, and I could borrow more cash. The cash is compounding. So there's your much safer version of speculation. So aside from speculation, so there's a speculative component because there's risk and because I have assets. If the markets turn south, I take less risk. I turn the assets into cash. The cash is going to be less volatile. We want volatility because that's where we get our price appreciation from, and that's where we get our asymmetrical portfolio growth from. But if the markets are increasingly volatile to the downside, you allocate more to cash. And that's the way you manage risk. This is the way all businesses operate. And I'm trying to apply a business model to the crypto space because we can generate significant 30, 40, 50% revenue streams. Did you have any purchase more collateral assets or pay off debt yesterday? Yeah, I took a little bit off debt. And as of right now, I put more debt on. Depending on market conditions, I take more debt or I pay off debt. I do it manually. This is all manual. There's no way to do this automatically yet. That'd be a nice DeFi protocol, in my opinion. Be the bank. That would be the name of the DeFi protocol. Let's wrap up the stream. I got to hit the work. Thursday, May 20th, 12:05 p.m. Discord is hot. We were very fortunate to have that place yesterday where we all were emotionally supportive and contemplating tough choices, finding our convictions, defining our narrative. It's a really great environment, and I really strongly encourage everyone to respect the portfolio, take less risk, have a fiduciary responsibility to yourself. And that's the best fiduciary responsibility that I could provide, is to tell everyone to respect the portfolio. Doesn't matter the size of your portfolio. If you're taking a large amount of risk, you could lose a large amount of money, and it's not worth it because especially if you have time on your side and you're young, you don't need to be gambling because you could grow the portfolio, you could work, accumulate value, compound that value, compound those assets, turn the portfolio into a balance sheet, and take the markets by the horns and operate them very, very differently than the status quo person. Treasury costs for crypto transfer over 10K reports to IRS. Yeah, pay your taxes. Good stream, Noah. Thanks, man. You're welcome, Small Advantage. I wish everyone a wonderful day. Tell everyone to subscribe, and I will see you tomorrow. Peace.